my everything. Said I am, nothing, nothing. Holy Ghost, hey, Holy Ghost. I am nothing. I am nothing without you. You're the very essence of my being. Ooh, Holy Ghost, you're the Spirit of the Father. You're alive in me, yeah. You're activating me, yeah. Empowering me. You are doing signs and wonders. Healing all diseases. You're activating me, empowering me. 'Cause you are my everything. You are the life I live. In you I live. Moving in my being. Said I am nothing without you. I am nothing. Absolutely nothing. Nothing without you. And I am nothing without you. I am nothing without you. Holy Ghost. I say it again, I'm nothing. Absolutely nothing. Absolutely nothing. Holy Ghost, yeah. Live the priceless. I am nothing without you. Nothing without you, Holy Ghost. Holy Ghost. Said I'll be lost without you, Holy Ghost. I am empty without you, Holy Ghost. Life has no meaning without you, Holy Ghost. Without you, I'm nothing. But with you, I can do all things. Holy Ghost.
All right.
Yeah,
How are we doing?
the very life that I live, it's you, through you, oh,
Hello, hello, hello. Can you hear me?
oh.
Okay, I think you can hear me now. Excellent. Let us go. Let's go.
Holy Ghost.
Welcome, everybody.
Holy Ghost.
All right, let's see. You can hear the music. Voice is barely audible. We can fix that. Actually, the music should actually music should actually go way down. All right. Can you hear me now? Yeah, I think you should be able to hear me now. Right. What a week. And I'm talking about just life, not the market. It's been quite the week. That's all I can say. But good stuff. Right, so just trying to get my charts up on the screen. And the moment the charts hit the screen, I will turn the music off. Okay. Come on. Alright, let's just turn the music off. Trying to get the charts up on the screen. I have been doing some shopping from another country for a new system. I've actually paid for two new systems, one for my office and one for my bedroom study. Both desktop computer systems, quite powerful, to ensure that I don't have these issues with lag anymore. The problem is they're in a different country, so I now have to arrange to get them shipped to Lagos, Nigeria. One of the downsides of living in Lagos is that buying quality technology is either a gamble with counterfeit ones or just very, very expensive. All right, I think we got it. So, where we are. Okay, there we go. There we go. So right now, everything I'm doing, my system's lagging literally a few seconds behind each time. It used to be great, and recently, I think it's just crying out for a younger kid, a younger brother or sister, which I will give it. All right, so, um, yes, I am now officially a TradingView proselyte. I have come over to the dark side, to the light side, or whatever kind of side you think it is. I am one of the dinosaurs who was dying on the MetaTrader hill, MT4, MT5, pretty much MT4. And you all have Devante, Samuel Devante, to thank. So SD, thank you very much. He basically said to me, "Give me 1 hour." Well, he actually asked for more than an hour, but he managed to sell me in under an hour. Basically said, "Give me some time on a Zoom call, and I will convince you to switch over." And he did. Um, so thank you, Samuel Devante, for getting me in on the the trading view ish. I'm still getting used to it. I must confess. Uh, Taking trades has been a little bit difficult because my brain is so used to the MetaTrader interface that it's okay to analyze with trading view, but when it comes time to trade, I'm a bit worried. What if I'm not seeing it right? Uh, but I have taken a couple of trades. Yeah, well, there he is, the man, the myth, the legend himself, Samuel Devante. Thank you. And well, he's here so he can actually tell you if I'm lying or not. Um, it's pretty much been all positive. So basically, while he was taking me through a tour of how the interface works, we literally just popped in a couple of trades or a trade that day. Just it was basically just a test to see how to go about it. There was no real thought into the analysis process behind it. Uh, just said, okay, let's draw a couple of lines, market structure, shift, blah blah blah. Let's see, and those were these. Um, but these are the first two proper analysis trades I've taken, and I must confess, I don't think I'm ever going back to MT4 because you can see everything so much more clearly. Uh, These two trades, one yesterday, one today, it's just opened my eyes to price action on a whole new wavelength because even just the aspect ratio of the charts you can adjust, and I can see gaps and fair value gaps and things that I can't see or I couldn't see properly on MT4. So I'm here to stay. Thank you, SD. Appreciate it. Um, for those of you on Telegram, I posted a trade for you yesterday and just showing the power of what trading views enabled me to do. Uh, I literally, I mean, you can see this here. So this shows you a live trade on this chart. That is a trade to the pip, almost. That was taken yesterday. Yeah, I once was blind, but now I see. That's exactly how I feel, Kieran. That's exactly how I feel. Yes, I think Kieran's been telling me to come over to Trading View for a long time, and I've been stubborn. So I think both of you deserve credit, both Kieran and Samuel. Right. So, but yeah, that just every, and also another thing that Samuel Devontae has been so kind to do is so I've been dabbling in volume analysis um for a little bit. Truth is, you don't need it to be profitable. But if you're like me and you're stubborn about being right almost all the time, it is just special. When you layer volume analysis on um, smart money price action, it's gold. It's yeah, I'm not going back. Case closed. And I don't think you can get this level of clarity with volume analysis on MT4. Probably you can. Maybe I just don't have the right indicator for it. But I came for the volume analysis, and I'm actually staying for the ease of use of the platform. So I'm going to be using it in my live trading moving forward. I'm still messing around with it on a demo account, but I'm going to be using it in my live trading moving forward. And like SD says, my broker is in trouble. Amen to that. Uh, I like that. I will toast and say amen to that. So let's just well, Kieran, I am waiting till the Black Friday deal. Yes, you're right. That's exactly what I'm doing. I think it's 20. I know it's 21 days away because I checked today, and so I'm looking forward to. And I hear sometimes you can get it for like £1 a month. If hey, sign me up. All right, so let's look at a couple of our asset classes. So basically, this is now this I've got to give credit where it's due. This what you call it now? This template was designed by Samuel Devontae. So he's literally just given me his entire setup, his entire template with indicators and everything to help me use volume analysis, and I'm very grateful to him for it. And so I've got to give him credit for that. And he's an amazing trader in his own right, who I want to celebrate. And he's got a couple of things that we'll be sharing with you in time to come. And I'm sure there's a couple of things that we're going to be collaborating on to make you guys a lot better in your trading. And I'm not going to teach volume analysis, not today, definitely. Partly because I'm still getting out. I can I'll put my price action trading up with the best of them, and that includes even the guys who mentored me, Chris Laurie and ICT, Michael Huddleston. I'm one of the original guys who followed ICT when he came out on Baby Pips, and I've been well for about 2-3 years. I was in everything Chris Laurie did back 15 or about years ago. There's very little about price action trading, naked price action trading that I don't know or can't execute. I'm nowhere near as proficient with the volume analysis yet. I'm getting there. Um, and so I want to wait till I can be just as prophetic with that as I am with price action. But it's just go study for yourself. And there's a lot of free guys out there. I think one of them is on YouTube. There's a channel by a guy called Trader Dale. I know he has paid a paid program, but just his free stuff has been quite enlightening as well. So this is basically these lines you see here. Every red and black horizontal line on this chart is pretty much from um, volume profile analysis. Samuel, Devante, you are far too kind, but I'll take that compliment. Thank you very much. Um, these are all from volume profile analysis. Um, and if you look at them with the eyes of a price action trader, you will spot that they line up very, very well with previous day highs and lows from session. You know what? Let me throw in another indicator on here. Again, basically every single indicator you see on this chart is Samuel Devante's. It's not mine. So, or at least something he pointed me in the direction of. On because I'm still finding my way around TradingView. But if we throw in that, so that is basically the sessions. Let's drop down the 15-minute chart, make it less busy. So Asia, London, New York zone, New York kill zones. You'll see that the black and red lines, and these are pretty much for those of you who know volume, these are what we call the point of controls. Those are the red lines, and the black lines are the volume area high and volume area low. They line up almost prophetically with daily highs and lows and session or kill zone highs and lows. And that's why I know I can trust them. This is one of the things that made me interested, because I realized, okay, these weren't just EMAs and rising and falling wedges and all that stuff, which can be nonsense, not all the time. But these were levels that were lining up with what I have come to trust with almost my life in the markets, which are daily highs and lows, daily opens and closes, session highs and lows, session opens and closes. If if you want to become a 10 times better trader than you already are, just go into your chart and map out over the last 5 to 10 days every single high and low, open and close of weeks, months, days, and sessions. And then just watch price move for the next 7 days. Don't take a trade. Just go back 5 to 10 days and look for every single. You know what? If you get the session highs and lows, you will automatically get the daily highs and lows. In essence, every daily high or low will also be a session high or low. Every weekly high or low will also be a daily and a session high or low. And so just go back 5 days and map out the highs and lows of Asia, London, and New York. Asia, London, New York. Asia, London, New York. Highs, lows, opens, and closes over the last 7 days, 5 to 10 days. And then over the next 5 to 10 days, watch what price does when it reaches these levels. It's just spectacular. That's how once you see it, you can't unsee it. And what the volume analysis really does is tell you how much volume, meaning how many buyers and or sellers were interacting at a certain price point at a certain day. And if you layer uh, a significant level of volume interaction, aka the point of control, the volume area high, the volume area low, if these line up with session, day, week, and monthly high, lows, opens, and closes, and you understand your price action, you understand your structure, your shifts in structure, your changes in character, your fair value gaps, your breaker blocks, your order blocks, your bias, your inducements, your displacement, and all the SMC concepts that we use. It's just magic. All right, so let me take this off your chart now that I've finished becoming an unpaid advocate. So let's start by looking at EU, which is my number one asset class. Um, Although Nasdaq futures is quickly giving that a run for its money. So in this season, because I don't have time, I've had 3 weeks of zero time, weddings, church conferences, all sorts of things, and I just realized stop whining and complaining about not having time and adapt. And so most people, when you don't have time, start trading higher time frames, I do the opposite. I start trading lower time frames in which I just get 1 or 2 trades a week that I can sit down for 10, 15, 20, 60 minutes and I'm off. So in this period, I have made my levels time frame the daily. I think I've taught this before how you want to trade with 3 time frames: the levels time frame, or what we call the higher time frame. That's either a week, a month, or a day. Anything less than a day is kind of suspect. You can get away with using 4 hour for this, but literally anything below 4 hour, you're literally gambling. Uh, and then a signal time frame and an execution time frame. So right now, my levels time frame is day, my daily time frame. Uh, my signal time frame is my hourly time frame, and my execution right now is 5 minutes. So I used to be weekly, 4 hour, 15 minutes. Now I've shifted down. That way I can get a bit more action in the little time I have. Hopefully by the time we get into December, I'll have more time in my hands again. So as usual, you just come to your levels time frame. That's the highest time frame you will be working with. For me, it's a daily right now. And the question simply is, what is price doing? That's it. That's all you're interested in here. Can you figure out the story of what price is doing? Uh, and remember, my bread and butter is start with where is the last consolidation. If you want to understand really where you are in price action, price moves from consolidation to consolidation. Write that down. That alone will change your life and pay your bills. The story of price action is always that it is moving from consolidation to consolidation. I repeat, you know what? And this is one of the beautiful things about using TradingView. You can actually just type in there price. It's a lot easier to mark up your charts than it is with MT4. 1 second. So price is always moving from consolidation, or you can say contraction, to consolidation. Yep, it will change your life, SD. And this here is game changing because the reason why price is always moving from consolidation is this. Let me explain it in simple English. Is this. You need to have a certain level of depth of pocket. I call it depth of pocket, meaning a level of capital to trade with to move the markets. Your $100,000 prop account, I can guarantee you, will not move the markets. Take that from me. I know to many of you, $100,000 is a huge amount. Believe me when I say it does not do anything in the context of financial markets. Right? So, to see a significant move on a price chart, any price chart, you need to be playing with deep pockets. The good thing is, elephants can't run through your backyard without leaving footprints. It is impossible for a person with deep pockets to enter and exit the market without leaving a footprint. Your job as a trader is to learn how to identify their footprints, either or predict them. So basically, fundamental analysis is trying to predict the footprints of huge pocket traders, and technical analysis is trying to read their footprints after they've happened. That's simply it. That's it. Fundamental analysis is okay. This should cause people with deep pockets to do this. Technical analysis is this is proof that somebody with deep pockets did something. And what this does for your understanding of consolidation is this. Consolidation or contraction, for instance, I'll give you an example. This is an example of a consolidation on this chart. And of course, depends on what chart you're on. A daily consolidation looks a lot different. and a weekly consolidation and a monthly consolidation and all that stuff. But did I pick it up? Okay, there we go. So this here, between this level here and this level here, there is a consolidation on a daily chart. Now, of course, if you drill into this on an hourly chart or a 5-minute chart, it will not look like a consolidation. Why? Because from here to here, there's all sorts of 1-minute candles and everything. But on a daily chart, it's a consolidation. Now, what does this have to do with a person with deep pockets? Well, consolidation in the market means that the people with deep pockets have not yet made up their minds what they want to do. That's what it means. In essence, price is held tightly in a range because the people with the capital to move it significantly, the whales, those who can cause significant displacement, and displacement simply means price moves significantly in one direction or the other. The people who can cause it are either not sure, in which case they are hedging their bets, or they've exited the market altogether. So they've either not taken any positions at all, or their net positions are close to zero, if not zero. And so price contracts is what we call it. It expands when they are ready to move. So the last consolidation on the chart tells you the last point at which smart money, what we call big money, smart money, enter the markets. And the next consolidation on your chart that's in the future, wherever it is, will tell you when they exit the market or they move into a hedging position. So you don't want to be trading when they're not trading is the point, because you don't know what they're going to do. You're not Jesus, right? Whether or not you're atheist, you get the point. You're not God, you're not divine. You're not able to predict what another human being will do before they do it. That's not what we're doing as traders. That's gambling. We are making informed decisions about what they have done in technical analysis, or what they are most likely to do based on obvious fundamental. For instance, if the Bank of England or the Fed Reserve in America cut the rate or increase the rate of interest, it is almost certain what will happen. It is very difficult to be wrong in the long term about what will happen until the next time they cut or boost that rate. Okay, so contraction tells you they're out, or they're hedging, or they're making a decision. Trending tells you they picked a direction. The problem is, for them to trend, for them to go where they want to go, they need to induce liquidity. All right, so let's put that up on the screen. Let's move this to this side, and then let's put up another one. Smart money needs, not wants, needs to induce liquidity to move. And when you understand this, you stop. You know, when we first started getting taught about banks and smart money and market making, then we realized fairly on that what we called market makers weren't really market makers, because hedge funds and banks are not market makers. They're smart money. Market makers are the people who create platforms or exchanges for which buyers and sellers can exchange. But we saw them as these horrible people who just wanted to be mean. In essence, they just want to make you lose money, or they don't want you to make money, and so they're faking you out because they're just wicked. No, actually, quite the opposite. When you get this into your head, trading explodes for you. They're not doing it to be mean. They're doing it because they have to. Let me repeat. Smart money is not manipulating because they want to be wicked. They're doing it because they have to. Why? Because if I have $50 billion to put into a trade, I need to make sure There, you're right. There you go. I need to make sure, that's right, Samuel Devante. I need to make sure I have people to provide the other side of the trade. For me to sell 50 million, somebody's going to have to be willing to buy 50 million at the price I want to sell. So I need to create a scenario using my power of displacement, and they can't manipulate the market endlessly. They can really only manipulate it within a certain range of pips or points or ticks. But they need to create scenarios where liquidity will be available. So let's look at this chart for an example. When they got here, this is a consolidation. This entire leg of price from here, look, this is one leg of price currently forming, right? From here to there and all the way down to here so far is one big leg of price. How do I get this? Okay, let's do it. Oh, what am I doing? Okay, so that's one big leg of price. They really wanted to get from here down there. That's the truth. They're trying to get from here. This is really all they're interested in getting from here down to here. But they need liquidity. Where are they going to find it? Well, above highs and below lows. Why? Because all technical traders have been taught to put their stop losses above highs and below lows. And so first of all, going into consolidation, first of all, creates liquidity above and beneath the consolidation. Secondly, there is usually going to be liquidity at the highs and lows above and below that consolidation anyway. If I need 50 billion counterparty traders, are they more likely to be found in the middle of this consolidation, or above it, or beneath it, or here, or here? That's it. It's just, when you think about it this way, it's common sense. There's a high here. There's likely to be stop losses there, especially on a daily chart. And you realize that there's apex predators because they're predators at apex predator. We call things apex predators because they prey on other predators. Smart money is not all created equal. There are some entities we see as smart money that are preyed on, quote unquote, by other entities we see as smart money. A daily chart is going to have swing traders placing their highs and their lows. They will most likely have more money than the scalpers. So the higher up you go in the charts, right, the more pockets the people trading based on those charts are likely to have, and therefore the more liquidity there is likely to be resting at these highs or lows or gaps or order blocks or whatever. Of course, on my chart, even in TradingView, red is low, green is high. All right, so that's what's going on here. I like this. Let me put this up on the screen. So apparently a Bloomberg trader once said, when you plan a trade and think of your stop loss, smack yourself in the face and put the trade entry in your stop loss area instead. I agree. That's it. They literally have to figure out where liquidity is likely to happen. And whether you use volume analysis, volume profile analysis, or naked price action, or both, that's what we're trying to figure out. All right, so this is where EU is going, right? Now, I can go up to a weekly chart and show you even further where it's going, but let's just focus and assume that this is all we have to work with. So we've taken out the high there. We're going to come down. Where are we likely to come? First low will be the consolidation low. That's gone. And what do you know? There was a minor consolidation around that level. Then we pushed up, and we've now broken this low. If this one goes, which I'm almost certain it will, but you can't be sure. If we take out this low, right, then I think we can very safely say that the next area of interest is either going to be this low here, or this fair value, this daily fair value gap here. Can you see that? There's a daily fair value gap there. Now, if you really ask me, or if you ask me, sorry, if I got to control the market, if I was a market maker, I'm not. What I would really love to do is turn this fair value gap into an inverse fair value gap. In essence, I think that there is plenty of liquidity resting here. If we zoom out, right, even if price is going, and of course we were at a key weekly level. Kieran, never, ever, ever, as a retail trader, place a trade without a stop loss. All you need is one tweet from President Trump, for instance, right? Never, and I've said this several times, and every single person I've told this that hasn't listened to me has blown their account. Never, ever place a trade without a stop loss. All right? Ever. 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 No. Tell yourself it is no. No. Am I clear? Right? It is personal, yes. It is personal. Do not ever place a trade without a stop loss. You can widen your stop loss, and even that should never go beyond 2% of your account. All right? Okay, cool. So, now, you know what? Let's go to a weekly so I can show you this. I didn't want to, but let's go to a week so I can show you this. So, this is where we are on the weekly, right? We just took out this high here a couple of weeks ago. We took out this weekly high here. And so price has a decision to make about whether or not it will keep going up or keep going down. All right, cool. So that's it. That's the weekly high we just took out, and that's what's sponsoring the reversal that we saw, or we are currently in the middle of. Cool. Well, based on this, if this is a leg of price, I want you to think like a normal technical trader. If this is a price leg here, from here to here, one second. Okay, right. We haven't hit. We're just about to hit 0.50%. This fair value gap here is just about 50%. I usually like to see, I'm not the market makers, but I like to get to about 70% before I really start to move. So we're just going to draw these lines up here, take off the fib. That's 50%. That's 60%. And they know the retail traders are going to be using this. In essence, they respect these levels, one, because they were taught to. Most institutional traders were taught to use Fibonacci's. But secondly, they know retail traders will be using Fibonacci's. And so they know that there's likely to be liquidity resting at these points. So let's move this. closer. So I am of the opinion that the market makers would benefit from bringing price at least into these levels. They don't have to, but I think they would. And so, from the moment we took out this low here 3 weeks ago, and I was in a trade for a week or so. Once we took out this low here, this one here. At this point, I was bearish long term or medium term, and I traded this from here down to about here, and then I basically had to disappear from the markets for a week or two. But as far as I'm concerned, we are largely bearish. This fair value gap is 50%. This level here, or this low here, is 61%, and this is 70%, right into this nice juicy order block just down here. Actually, I'm going to take my order block as the low, so as the wick of that daily candle. I think I've taught many of you this before. Every time you see a candle where the wick is bigger than the body or about the same size of the body, there's an order block on a lower time frame hiding there. So, nice. So I have 3 targets: this fair value gap, this low, this consolidation here, or even better, all the way back in. Let's just take the whole candle all the way back into this order block there. Cool. So I have a bias. That's it. Now, if you're a scalper, you don't need a bias from a daily chart. You can get your bias from a 1-hour chart. But anything day trader, intra-week trader, over the last 3 weeks, if you are not scalping, and by scalping, let me define scalp. My definition of a scalp, because I see some very, in my opinion, dumb definitions of scalping that will just lose you money. My definition of a scalp is that you are in and out within a session. Any trade you hold for more than one trading session is not a scalp. Please. If you're scalping, you're in and out within Asia, you're in and out within New York, you're in and out within London. Anything longer than that is not a scalp. Yeah, Devani says so. Most do 50, but yeah, 71, 78, and 81. Yeah. Well, I just use 71. I use 61 and 71. But of course, if you get those deep retracements down to 81, you will get golden trades. You'll get golden trades. But anything from 61 to 71 usually is good enough for me, because the older you get, the less concerned you are with monster hour to hours, and the more concerned you are with just not blowing your hard-earned money that you could use to take your wife on a date or buy a new pair of shoes for your kids. You'll understand in a couple of years. So the bias on anything else other than a scalp is bearish. And I want you to now just drop down to 1-hour chart and just ask yourself, right? We're going to look back over the last 2 weeks and just tell ourselves, what side of the market would you have if you had one trade a week to make, right? Let's look at this. From the moment that profile shifted, and it shifted right about there. So cool. Here, from this point, can you see that every rally, has been an opportunity to sell? So look at this. Start from here. There we go. So, all right. We went down. We came up. We went down. We came up. And you will notice that every time it was about to resume going down again, there was a tail. What was the tail? A consolidation. Look at this. Look at this with me. This is where the move began, right? So the market's dropping, dropping, dropping. It just literally bounces up. And when it gets to the next major sell point, you notice a consolidation. Can you see that? It hangs around for roughly a day or two. Then it drops again, right? Here, it hung around for a whole week. It was begging you to sell it here. This was where I got in on the downward move, right? And I showed you some of those trades 3-4 weeks ago. Then it dropped again. Notice that the consolidations on the bounce are not as pronounced as the consolidations on the drops. I just made you money in your future. That one statement, just go think about that. When the market is moving in one direction, it gives you opportunities to get on board. Not always, but usually. Now, you see a pronounced consolidation here and here. Why? Because there's about to be a pronounced retracement. So this is the first major pronounced retracement since we started shorting EU. But what do you know? You get there. Notice that there is a drop, a precipitous drop. Why? Because we came back into a level. Notice this line was on my chart from before. Just draw it out. Notice it was there before, right? Okay. We came back into that level. Boom. So this was a reaction. It wasn't a reload. It was a reaction. This is the reload. And what do we have again? A consolidation. Kieran, you can't bet your house on it, but 6.5 to 7 times out of 10, that's the case. All right, so yesterday I came into the markets with literally an hour to spare. Like I literally had an hour to find a trade if there was a trade to be found. So what did I do? I know what my bias is. It's bearish. However, sorry, that's I need to figure out trading view how to mute my alerts. Let's see if I can figure that out. By the way, I've got a live trade going on NQ that I'll show you in a second. Honestly, I don't know how to do this, so I'll have to figure it out. I'll get SD or Kieran to show me. So yesterday, I came into my charts. I know my long-term bias is bearish, and so I'm basically looking for right side bar, sir. Right side bar, right side bar. Okay, right side bar. This one here? This one? I guess not. Or here? Okay. All right. Yeah, I just want them to stop pinging. I just want to reduce, to take off the volume. I don't want to stop the alerts. I just want to make sure that they don't make a sound. Anyway, we'll figure that out later. So, I came into the market. I'm a New York trader, right? I'm a New York trader. So, on an hourly chart, I literally came into the market while this candle was forming, right? This candle was already in the middle of forming when I got into the markets. And so I literally had 10 minutes to find a trade. And by the time I found it, the market had moved. So I got in late, but I still got in. This is annoying. Click on one. Okay. Okay. Then what do I do when I click on it? Control A backspace. Okay, okay, I'll just delete all of them then. That's fine. All right, so is that it? Control A. Uh, you know what? Yep, delete. Yay! Cool. Awesome. So, where was I? Uh, oh, so that's my ongoing trade. I think I'm on the wrong. Let's get back. No, how do I get back to EU? All right, let's go back to Euro USD. Am I going to lose everything I wrote on this chart just now? Okay, it's still there. Good. But I think I lost the writings. That's fine, the text. Okay, so I came in and I saw there's a trade going on. Can I get in? I had 5 to 10 minutes to figure out if this was the trade. So I know my bias. It's bearish. However, to sell, a market maker needs to push price up. And I came in on the push up. Great. The first thing I was looking for is, where was the last major change of character? Where was the last Control Z? Let me see. I think it's gone. That's fine. Where was the last major change of character? It was down here. So this literally all happened in 5 minutes. Let's just do it real quick. Where the price reversed last? It was there. What low sponsored the reversal? That one. Go there. Okay, so I now know that this was where the change of character happened. Well, if the change of character happened there, then this is the high that sponsored it. In essence, it was at this point that we knew that we established the fact that we were in a temporary bullish climb. So we're still looking to short, but we need to push up into a level. Well, what level? Okay, so very simple. You could literally just have drawn a Fibonacci if you wanted. If that's your cup of tea, just draw a Fibonacci. Now I want to go the other way. Okay, so let's draw Fibonacci from this high to this low. Right? This is the simple way to do it. This is the I don't have time for messing around. This is the I can't drill down. I just want to get in. Okay, fine. So there you go. 0, 1. This is technically 75%, just the other way. Right? Is it at the right time of the day? Yes, this was in New York. Was there a displacement reaction? Yes, there was. How do I define displacement? Fair value gap. That's my definition of displacement. When price moves and creates a fair value gap as it moves, right? That's how I define displacement. It means the move was impulsive enough for there to be a liquidity gap there. Look at this here. Let me blow this up a bit more for you. So, several things happened here. First of all, there is a minor change of character in here. This is the major one. But there is a secondary change of character that happens in here. Right, takes out that low and then breaks market structure to the upside. And it does it with displacement. There's a fair value gap here. Literally, right? Even before this happened, we've already broken structure here and we've had a deep retracement and a 1 hour engulfing. You literally No, sorry, I'm trying to get a, sorry. I told you I'm still figuring trading view out. This is what I'm looking for, long position, right? You literally could have done this, right? Enter there, put your stop loss under that low, and target 1.61. As long as it gives you at least 2 to 1. And it did. This is the I don't have time to trade entry. It's the I don't have time to trade entry and the I am risk averse entry. And you would have picked up your winnings on the third day, right? You would have been in on the 23rd and out on the 27th. So 3 days later, 1, 2, 3. No, 25th and out. So there you go. That's we can all do that, can't we? And this is actually even counter trend. I'm going to show you how powerful it is when you do it in line with the higher time frame bias. Okay. The second entry, which is the I don't have time, but I'm more risk tolerant, is just put your stop loss beneath that low, right? Put your stop loss beneath that low. If you're scalping, just go back to 100% on the fib. That's it. And if you can wait, I would always advise that you go all the way up to the 161.8. This would have given you over 3 to 1. Right? Okay. If you are even more risk tolerant, put your stop loss at the bottom of the fair value gap that was created. Because sometimes price will at least come back and close that fair value gap. This would have given you pretty much 6 to 1. Same entry. Now, if you have a bit more time to refine your entry, right? So we've had this displacement, and the crossing of this level here confirms the bullish impulse, right? Move your fib again. That's the new high there, right? Actually, no, sorry, here. So this is the high that broke this structure. That's the new low. And then wait again for at least 0.5. And there you have it. Literally, once you push back down into discount, from this point, your question then becomes, where's your low? Again, it can be that candle, the engulfing. It can be the fair value gap. Wherever you want to put it, I'm going to take the fib away. So you could have entered several ways, right? The first entry could have been, just wait for that. Stop loss there. This line here was my exit. Why? Because just looking at the way, it was either this or this. I'll show you why in a second. That there is a nice cool 4 to 1 R to R in literally 2 days. But I wasn't there for any of this. I got in on this day. And what did I see? Very straightforward. Let's take a look at it. That was a daily low from the day before. Price swept it and broke structure to the upside. Can you see that? It's the same thing. took out the low of this day, right? And did it with displacement. How do we classify or define displacement? It left a fair value gap on the time frame we're looking at. There's a fair value gap there on a 1 hour time frame. And these are the kinds of things that are difficult to see on MetaTrader because of the aspect ratio. But you can see it very clearly here, right? That candle is high and that candle's low. There's the fair value gap. Now, you don't always use fair value gaps to trade in terms of figuring out your highs and your lows and all that stuff, or your stop losses and your take profits. The first purpose for fair value gap is to show you displacement. Case closed. If there is displacement, it means there is liquidity there. Whether or not that liquidity is respected, it tells you something sponsored this move. And so, once that happened, I just waited for a reload. Well, I would have waited for a reload is the point I'm trying to make. But I came into the market on this candle. This candle was already on the way. So I looked back, came here, said, okay, this has happened, that's happened. Liquidity sweep, fair value gap, displacement. Retracement. Now, time, 1 second. It looks like you guys can't see my screen. Okay, it's back. So there's the Fibonacci, right? We'd already gone all the way down to almost 25% or 75% retracement. And then we came up. So if you're trading a 1 hour chart, your entry would have been here. But I was already on this candle. And I dropped down to a 5-minute chart, and this is what I saw. Okay. Let's get rid of that first. All right, so on that day, on a let's see, let's find the day in question. On the 5-minute chart. There we go. So there we are. Right? So on a 5-minute chart, you see very clearly price broke to the upside. We can see a 5-minute fair value gap and all that stuff. It came back to feel the fair value gap and then took off again. This should have been the entry. Let's take this off. This bullish engulfing here should have been the entry. And if that had been your entry, you could have taken that low as your stop loss, or all the way down to that low as your stop loss. If you're scalping, that would be it. Now, again, I would not do anything other than a scalp against the long-term bias, as we've already seen what the long-term bias was, right? It looks like as we've been taught. Okay, anyway, anyway, that's fine. So I was looking for a scalp, so I got in here because the move had already begun. So I got in here, and I believe my stop loss was there, if I'm not mistaken. Why? Basically, this fair value gap I was trusting would hold. Where was my take profit? Well, 1 second. Yesterday's high was here. That was the previous day's high. And so because we're trading against a long-term trend, we're not that confident in our bullish move. If that's the high, I just asked myself, if that high is going to hold, where would the order block that holds it be? Well, if that high is going to hold, this here will be the order block. Is there any intermediate liquidity inside that order block? Yes, there is. This obvious high here. In essence, this liquidity could be taken and this order block still be respected. And that's why that was my stop loss. That's it. It's really that simple. And these should be green. Okay. So that's how I picked my stop loss. That was it, to the pip. And I actually came out a little bit before the stop loss, actually. Maybe a pip or two before. So that was the trade. Pretty much a 3-to-1 risk to reward. And it looks, like some of you say, oh, it looks prophetic. It's not special. This is something you can do because I've just talked you through it. It was a scalp. I literally recorded it live on a private YouTube video. Then I uploaded. You'll see the video on this channel, basically just tracking the trade without any volume. And that was it. Now, what happened afterwards, which I really wish I had time to pick up? Well, since we know that we're in a bearish protocol, we would have expected that reaction to come down. Did it come down? Yes. Now, did I expect it to drop so drastically? No, or I would have traded it. I'm not going to lie. If I thought this was going to be this spectacular, I would have traded it. Now, Samuel Devante will tell you that we could have picked it up using volume analysis, which is great, but I didn't. But that's fine. Why? Because FOMO at missing a big move shows you're an immature trader, because that big move you missed is literally most likely going to set up another move, either as a continuation or as a reversal. Let me write that down for you. Significant moves that are hard to predict are always setting up, actually almost always, not quite, because it can just be a COVID or a tweet from a world leader or natural disaster or flash crash, but are almost always setting up predictable reversals or continuations. In essence, if something happened that you couldn't spot, Kieran, I will address that later. Perhaps I'll let Samuel Devante take that. But number one, even the volume, if you're with a major broker, even the volume traded by that broker is in itself a clue. But secondarily, you can actually, and I think TradingView has on its premium plans, it gives you volume volume data that is more centralized, but I will address that later, perhaps in the Telegram group, because I want to be sure I'm correct. Like I said, volume is not yet my area of professorial expertise, but I'm getting there. So that's fine. Now, this is the power of trading with the bias, though, because you see that going against the bias, it took us 1, 2, 3, 4, 5 days to do what we reversed in one day. Yesterday reversed 5 days of bullish activity, but that's okay. Like I said, you should only be trading counter bias if you are a scalper. Now, the moment you see this, ladies and gentlemen, come on. If we are price action traders, you should be licking your chops. Why? Because, first of all, there has been a break of structure. Secondly, notice that on a 4-hour chart, let's go to 4-hour chart, the change of character here lines up pretty much, in essence, this low on a 4-hour chart is the low that would have confirmed the change of character, this one. And it lines up perfectly well with the other change of character from last week. Okay, so 1 second. Use the future forex 1 second volume areas and transfer that to your brokers. Okay, great, awesome. That's the volume professor in the clan. There we go. So this here low lines up with this, so that's very significant. In essence, we have just reversed the original change of character, is what I'm trying to tell you. This was the original change of character that sponsored the move up. We have literally just stabbed through it with a reverse change of character with a whopping fair value gap. A huge one, right? That's a 4-hour fair value gap. And of course, like all things, the bigger of the time frame, the more significant it is. On a 1 hour, it's even bigger. There it is, from there to there. And of course, the 1 hour is a signal time frame. We'll take the entries in the 5-minute. So there we go. We took out the low, reversed the original change of character, closed beneath it with a massive fair value gap. Ladies and gentlemen, EU was begging to be shorted today. Literally, it was saying pretty please with sugar on top. Also, so that's the fair value gap. This is the breaker block, the manipulation block, right? Look at the confluence. This is the change of character level. Look at all these things lining up. And I haven't even used volume analysis. I don't know if I want to, in case I butcher it, but SD will correct me if I do. But let's throw on the volume profile analysis there. Okay, so yep, that's the volume area low from yesterday. So look at this. The volume area low from yesterday was the actual change of character point on a 4-hour chart. We stabbed back through it. We came back up to it. We didn't quite hit the point of control, but that's fine. And I've told you that if you are a day trader or even an intra-week trader, 1 hour engulfings are gold. Told you that before. If you get your bias for the day right, 8 times out of 10, the first 1 hour engulfing in the direction of your bias will be the entry. Well, where's the first 1 hour engulfing? It's here. At the point at which price crosses the low of that candle, it has engulfed. And it went back. It came back for you. It literally said, please, 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 take me. Right? It came back for you. There. Right? There. This stab there. If we drop to a 5-minute chart to take our entry, if you drew a zone on the POC level, you realize it stabbed into the zone. Well, there you go. I'm sure it would have, but I just didn't want to butcher it since I'm still refining. Look at this. I mean, ladies and gentlemen, come on. Come on, man. Look at this. So, let's look at this, right? That 1 hour engulfing was a 5-minute set of market structure breaks or market structure shifts, break of structures, and a deep retracement back to the levels I told you I like. I like anywhere from 61 to 71. This came all the way back to 75, and then it shorted. This, ladies and gentlemen, was your entry. This 5-minute engulfing was the entry. So short position at the close of the engulfing candle. Your stop loss is, if you're brave, you can make it that high. I mean, if you were scalping and you were brave enough to put your stop loss there, then this was a 13.94 risk to reward ratio. I mean, this will build your house in no time. But even if you weren't that confident, just put it above this height. That's fine. 5 to 1 ain't nothing to sneeze about. You feel me? That's 5 to 1. You would have gotten in at 9:35, at least server time, and gotten out at 1:05. So 9:30 to 1, that's 3.5 hours, ladies and gentlemen. Yep, Kieran, game over. Game over. Now, sadly, this geezer here was away from his charts when this happened. And I was like, man, I was like, ah. So what did I do instead? Please, ladies and gentlemen, don't try this until, see, if you open a chart and it doesn't speak to you, don't do what I'm about to show you. Wait for, this is what I call a scripted setup, right? It's scripted. It was telegraphed. It gave you 20, basically you should have been anticipating this trade for 24 hours, right? Okay. And also, I like to trade while I'm there. I like to make live executions. You're right, Kieran. We need, yeah, and I'll be talking to you and Simon Devante about, we really need to automate these things because I feel like we're leaving money on the table. But if you say, you know what, I couldn't, like you, Israel, I just could not find the time to take this trade or be sat in the charts. Fine. Let me show you a simple way, right? Simple way. Yesterday, you know that there's going to be a retracement, right? You know it's going to be a retracement. This is the level. This is the breaker block, right? Or you could have used a fair value gap. That's the fair value gap, right? Whichever of the two you want to use. Okay. What if you just put your entry at the change of character level? Just put a pending entry and put your stop loss just above or at the candle of the fair value gap. And to be conservative, just put your profit, your stop loss, either back to the original low that's already formed, that would have given you 3 to 1, or draw Fibonacci and find an extension point. So from the low to the high, right? We haven't gotten to the 161 yet, and I think we're definitely getting there. $161. This is the lazy way or the time poor way to trade this. Can you see it? It says the guy who didn't do it, but I thought I planned to comment it in my charts, but I just didn't. But if you know that you don't have the time to trade New York or London, just look at that. And that's all off a 1 hour chart. We've rated liquidity. We've changed character in the direction of the higher bias. So these are the high probability setups, right? We expect, and we've left behind a huge fair value gap. Draw your entry with price at least coming back to fill, to touch the change of character level. Put your stop loss on the other side of the candle, the body of the candle, or you could use the high of the candle. That broke character and caused the fair value gap. Just put a limit there. And by tomorrow, you will be 5 to 1 up. And even if you had gotten out today, at the height of today, you were 4 to 1 up, 3.96. And this is actually one of my scripted setups. You know, I spoke to you guys about giving you some scripted strategies you can trade. This is one of them. I've developed 5 now. There were 3, but I've developed 5 now. I could just basically say, look for this every time in the market, and every time you see this, do this. 5 of them. This is one of them. Find the daily bias. Track consolidation. Wait for retracement and an impulsive move. This is the impulsive move, right? Liquidity taken, strong push, cause the fair value gap. Wait for price to retrace to at least 61% on the fib. Your entry point is the change of character level. And I'm just seeing actually this could have been refined because this is actually the change of character level. Because this was this here. That was the low that went, the low that had to go. So that's an even more refined entry, right? That's an even more refined entry. There you go. So basically this is the low that was taken out with the impulsive move and left behind a huge fair value gap. Wait for price to come back to at least that place. Sometimes it won't. You just need one strategy to be set for life. Kieran, I agree. And Kieran, this could be your strategy. Especially if you are, like, I know you're very busy with work and life and family. Just this, just all I ask is that when you become a millionaire, you send me some of your profits to say thank you. But that's it. All right. Okay. So I think I'm going to stop there. I was going to show you the trade I did take on on Nasdaq futures. I banked 3%. I've left a runner on, and that runner has fluctuated between 2% and zero. It's roughly around zero now. It's come back to almost, not quite, but it's come back to almost break even. I'm about $200 up on it at the moment. About an hour ago, I was up by about 1.7K. We'll see how it goes, but it was a short on the Nasdaq futures. I'll probably have to show you another time because I have to go. But it's been live. I've enjoyed hanging out with you guys. Um, this is how you do it. This is how you make money in the markets. And I think what I'm going to do is if he's up for it, maybe one of these days we'll get Samuel Devante to actually, I'll do an analysis of a trade using pure price action. Maybe we'll get him to do the analysis of the same trade using pure volume analysis. Then we'll see where the confluence is and how we could have used both to be doubly sure about the trade. But yeah, thank you. That's it. Daily bias, consolidation, change of character, retest your entry. And now this is if you don't have time to sit in front of your charts. If you do, you can refine. I mean, like you could refine a lot better, like I showed you. But if you just want to get in and out without too much staring at your charts, yeah, your entry is the change of character level. Your stop loss is the high of the candle, or the high of the high of the body of the candle that broke character or changed character, and is the middle candle or one of the middle candles of the fair value gap. Your first target is the original low that was formed by the break or the change of character. Your second target is a Fibonacci extension, and I like 1.6, especially if I'm already trading in what I consider to be a higher time frame bias direction. Determining daily bias is your weakness. Well, Kieran, you've got two things. One is I've already showed you how you can do it, but you know, uh, even if you don't, then just stick to scalping for now. Stick to scalping for now, and or the third way you can do it is be prepared to lose when the trend bends, but wait for an already clearly established trend. Wait for a clearly established trend on the 4-hour or the daily, and then wait for price to come against the trend and to displace sharply from a defined level. Like this was, price was coming in. So let's go here real quick. Let's close with this. Let's see if we can help you with this. So hopefully you can see that from here to here there has been a clearly defined trend. Over the last month, price has clearly been shorting, and it's even more pronounced if you look at it on a 4-hour chart. So, 1 second. So on the 4-hour chart, the trend's even more pronounced. There you go. SD, how do I change this? So on MetaTrader, the dividers in the 4-hour are always weekly dividers. Here, it's forcing me to look at a daily divider in the 4-hour chart. How do I change the dividers? TradingView experts, help me out. So I want to move this daily divider to represent a weekly divider. How do I do it? Can someone help me out? While I'm waiting for the answer. So as you can see, there's a clearly defined downward trend in the 4-hour chart. And so you just want to be selling the rallies. Now, at some point, it will be a change of character on the 4-hour chart, and you will lose. So right click on the screen. Okay. All right. And then What next? Is it settings? Okay. Canvas. All right, all right, all right. So top mounted pane, visible text lines, watermark. No, it's not canvas. Or at least not that I can see. Um, hmm. Yeah, anyway, we'll figure that out at some point. The scales and lines, previous day, high, low, date format. Um, anyway, we'll figure it out. Okay, so I'll ask Google. So you just, as long as that trend's in place, you just want to be selling the rallies, right? And if you look at this, this is another strategy of mine, and I don't want to really go into it because of time. But you know what? Let me open a 1 second. Let me see. Let me do this with another pair on which I can have a clean chart. So let's go to let's do gold, for instance. Let's do gold. So which one do I want to do? Commodities, CFD. Okay, let's do gold. Okay, there's already some analysis here. Right, let's do GBP USD. I need a clean chart. Okay, so excellent. So I just want to show you something. This is a 4-hour chart, right? I'm going to draw some lines. Tell me if you know what these lines are. Are you ready? Cool. So it's going to draw a line from here across the entire screen. What's the line? Very simple. That's a change of character level. It's a pronounced one, right? Okay. Can you see what happens every time price comes to it? If the trend is intact, look at this. Consolidation, sell. Consolidation, sell. All right? Okay. After this sell, where was the next major change of character line? Well, it would be here, wouldn't it? What happens every time price gets to it? Consolidation, sell. This was technically still that same consolidation, so we'll just widen it. Okay? To capture the two lines. And again, consolidation, sell. All right, but I'm guessing this is just a coincidence, right? So let's try the third. Where's the next change of character major line? Well, what do you know? You can still widen this one to capture it because it was still in consolidation here. And there it is. Where's the next one? This one, right? Okay. And what do you see when price gets back to it? Consolidation, sell. And again, consolidation, sell. Well, if that is true, what do you think would happen if price gets back here? What do you know? It tapped it almost to the pip. Consolidate. Well, and there was a consolidation here. But I suspect that if you draw that out, there is a good chance that price retests this line. And if it does, except the long-term trend has changed, what will happen? Kieran says he needs a ton of patience to wait out these 4-hour consolidations. Well, I'm glad to be of service, my friend. Because if you drop down... Okay, how do I get rid of everything on my screen? Actually, let's go back to 4-hour chart. Let's take a picture so we can stick this in Telegram. Okay, so how do I get rid of everything on my chart? Like, I just want to get rid of everything. Okay, object tree, I think it is, right? Okay, so Control A. I want to move everything. Oh, no, sorry, here. Okay. How do I just want to get rid of all of these. Right click and delete all diagrams. Okay. Right click. Okay, 1 second. Right click. Okay, remove 12 drawings. Right? Okay. Excellent. Well, Kieran, I'm glad you're impatient. Well, I'm not glad you're impatient. I wish you were more patient, but you get the point. Um, let's see if it works on a 1-hour chart, shall we? What's your bet before I carry on? What's your bet on whether or not it works on a 1-hour chart, Kieran? Of course, a 1-hour chart is more noisy. So the further down you go, the more noisy it will become. But let's see. So where's the first change of character? Here. What happened there? Consolidation. Sell. Where's the next breaker structure? Sorry, I don't mean the first one's a change of character. Everything after that's a breaker structure. So I need to get with the new terminology. Like I said, I'm a dinosaur from the early days of ICT. So what happens when next we get here? Well, consolidation sell. What did I tell you consolidation means? It means people with deep pockets are either not participating or are hedging their bets or trying to induce liquidity. Okay. Where's the next one? Do I need to keep going? Consolidation, and you could actually include this here because this, okay. Kieran, you like what you see? Where's the next one? So here. Was there a consolidation? Not really. But did price come back and respect it? Yes. Okay. Where's the next one? Here. And you see this a lot, that the more pronounced the liquidity void is, or gap, or fair value gap is, usually the more times price respects it. Because it's so significant that it is still more, but look at this, right? Consolidation. There's no consolidation here, but it comes back and nicks it. And again, This is a bit, not really a full but my point is it hangs around there for a while. And the reason I'm saying consolidation is it's usually giving you a chance to get on board, is my point. It's not, it's saying, okay, if you want in, you can get in. All right. Where's the next one? Down here. Well, consolidation buy, but you see that that level there was the support to reach up back there, and then when it crossed it, it hung around for a while, and then it sold. Where's the next one? Here. And I can go on and on and on. So on each of these, right? I mean, even on a 15-minute chart, let me show you. Even on a 15-minute chart, my friend. Okay? Let's just find the, okay, so let's take this. Let's see. Let's find the beginning of a significant move. Okay, so let's take this as the beginning of a significant move. Now, these are things no one showed me. And I'm saying that to say, this is what you get from putting the time in front of your charts. Yep. SD, I'm going to come to that in a second. That's a good one. I'm going to come to that in a second. Just put that up on the screen. I just, the same way no one showed me the 1 hour engulfing in terms of daily bias. But when you give yourself to the markets, they give themselves to you. And this is why no matter how much you learn from someone else, you can't do away with the need for you to sit. And I don't mean you have to be in live markets. I mean just go back over historical data. Just analyze for years. Look at the same thing here, right? I mean, classic profile, isn't it? And Kieran, this is the strategy I gave you today. The one's going to make you a millionaire, and then when you become a millionaire, you're gonna do right by me, right? So look, a high was taken, right? Price broke, changed character to the downside. Where was the point at which it changed character? That low, right? And we want to see displacement. Was there displacement? In essence, we want to see a sharp move. Well, if we go, so this is the 7, I mean, I don't want to lose this, but if you know, let's go there. Let's go to 1 hour chart, 17th of October. Was there a fair value gap? Yes, there was. And notice I'm giving you the clues as to the strategy. Notice I'm always checking for the fair value gap on my signal time frame. In this case, the signal time frame is the 1 hour. Okay, so there's the fair value gap, right? From that, 1 second, let's blow that up. Okay, nice and easy. That's the fair value gap. That candle and that candle, their wicks don't touch. And the middle candle was what broke the change of character level. Right? You see that? This candle here broke the change of character level. Let's refine that a little bit. And created a fair value gap. Wait for price to come back into the fair value gap. Remember? Of course, you want to be doing this in line with a higher time frame bias. Put your entry Oh, sorry, wrong way. Or reverse, yeah. Okay. Put your entry. Where did I say to put the entry? At the low, or at the level of the change of character, right? So that level there, that line there. Put your stop loss where? Either at the end of the fair value gap, or to be more uh, conservative, the body of the candle that forms the gap. And what did I say to do? Get yourself a fib tool. Right? 1 second. And you can actually use your fib tool to refine this setup, because you don't want this if it hasn't crossed 50%. So in this case, okay, yeah, 50, yeah, that's fine. So 38.2, in which case, like I said, my entry would be here, just based on the fib tool. 38.2. My stop loss will be either that candle or the fair value gap itself. Let's put on the candle. And you want to go, if you are in line with a higher time frame, you want to go to 161.4. So 161.8. So that's 161.8 there. And also try and make sure you line it up with anything like the point of control from the previous day for volume traders, a significant high, low, or order block or whatever, right? So because of this consolidation here, I would have picked maybe 141.4, because I would not be surprised if this consolidation had sent price back up. Well, did it hit our target? Let's see. Yes, it did. And in this case, it actually surpassed the 161.8. There you go. But like I said, we only came to the 1 hour chart to look at the fair value gap. The refinement on the 15-minute chart or the 5-minute chart is usually legendary. So with this strategy, you want to use the 1 hour time frame to spot the gap. You can refine it. So there we have it. That's the gap. So that's the 15-minute level, right? There you have it. And if you are actually watching the chart, if you are in the market at the time of the entry, just put that fib tool back. So that's the swing low. Now I'm on a fib tool. That's the swing low. That's the swing high. Right? You want at least a 50. So you got 50 here. Excellent. Yeah. So the 15-minute doesn't really offer any major refinement here. It will still be the exact same trade levels. Right? Like I said, just go to the 161.8. That's fine. Here, that's 5 to 1. And you would have hit your target in, well, on the third day from the day you enter the trade. Rinse and repeat. Okay, so I think I've gone on longer than I planned to. I'm feeling a bit tired. Can you guys see it? Is it? And again, like I said, if you start adding the the volume analysis, a volume profile analysis, it becomes even more spectacular. Okay, I'll just show you something quickly. Not the analysis. I can't show you the analysis because don't have the time for that. But I'll just show you the trade that I'm in with a nice 3% chunk already taken out. To show you the runner that's left. So something that SD and I cooked up. Okay, there you go, share screen. Okay, where are you? I think that's it there, right? NQ, is it this one? No, I want MNQ. You know what? No, nope. Yeah, this one. Oh, it should be a Chrome tab. So where is the Chrome tab? Can't find it. I can't find it, mate. All right, just use this. Okay, so yep, that's what I want to show them. That, like I said, NQ is starting to become my second favorite asset class. The same way I was, I don't want to trade on TradingView. I also didn't want to trade on futures, but I'm now a proselyte of NQ. So there it is. Now, again, that was the entry I got in here. Sue me. But these are the micro futures. I'll show you the account history again. So I took the same trade. I took the first trade, so the same trade on the micro and the mini. I closed my profit on the mini because I like to guarantee myself some profit every day. So that's this, basically the exact same trade. So if I can show you here. All right. Okay, there we go. No, not GBUSD. NQ. Still figuring my way around. I think this is what I'm looking for, right? Yeah, CME. Still figuring my way around. Okay, so there we go. So, so that's the trade. So I came out. I think this is me. Came in here. Came out. No, yeah. Came out there. This here is a sell limit for a potential future short, and I just closed this for that nice little, where are we? So that was this here today, and then I am still in same asset class, just different ticker on the micro. So I put in a trade on the mini, trade on the micro. There's my stop loss. Technically it should be here, but because I'm holding the trade overnight, I thought to give it a bit more wiggle room. So I put it, but I put it there. And basically it's just this here. I'm expecting that to hold if we're still going to go south. So I'm basically turning support into resistance. And If this pays out, be a nice little almost 5 to 1. Analysis, I cannot be bothered, but I'll just see if you can spot it yourself from what I taught you today. Can you spot it? Can you see it? There is a fair value gap there, right? So that's the signal. Fair value gap, and price nicked it. Now, can you see it? Let me. Price took out a high, changed character to the downside. Let me spell it out for you. This is the change of character here. Right? Okay. This should have been the entry, but I wasn't in front of my charts to take it. So I just waited for it to basically break structure one more time and refine the entry there. Look at that. Okay. Now, if you don't have the time, just enter there, stick your stop loss here, or at worst here, and walk away. However, this is the issue. We are technically trading against the long-term bias. Now, this is one of those situations where it's not clear because we are due for a significant retracement even on the long-term bias. Right? Butter. Someone say butter. Oh, the trade's moving nicely. I like that. Nice when the trade moves while you're analyzing. This over here, ladies and gentlemen, is what you call a liquidity void, aka a traditional gap. Not a fair value gap, just a liquidity gap, period. And these are even more powerful than fair value gaps. So, now, when I took the trade, this was my stop loss. But because I'm holding overnight and I don't want any hanky-panky, I'll be happy to bank some profits overnight and come back. What's that red line? Well, that's volume analysis. I've got SD to thank for that. So, even if we don't get there, I still think we are due somewhere up until here, which is why that's there. So even if we don't feel this in immediately, this should mean there should be some draw. All right? And so, back to 1 hour chart. So that was my analysis. Now, like I said, Simon Devante came to the exact same analysis using volume analysis profile, a volume profile analysis. And that for me was a very strong confirmation. But you can see that you can get in just nicely. Now, since I missed the initial, no, I didn't miss it. Did I? No, I didn't miss it. But where was my, yeah. So I missed the optimal entry on this particular entry, right? So that's the optimal entry up there. So how did I reload? Well, there is a 1 hour fair value gap here that was violated. It now becomes an inverse fair value gap. And so I just waited for price to push beneath it, come back into it, and I sold on a limit. I literally sold, I was trying to sell at the close of this candle. I was about a second or so late, which is fine. So I got filled there. And like I said, my initial stop loss was the top of this fair value gap or the body of this candle right there. That's it. Now, you can refine this on a 5-minute chart. So on the 5 minute chart, this was my entry. In essence, you could have waited for this candle to close. I could not be bothered. Like I said, I didn't have all the time in the world. And so there's the entry, right? There's the stop loss. The stop loss is now, as you can see, 1 second. Let's see if I can. So it is just above, or it is, sorry, the high of this candle right here. This one right there. And we're hoping for a nice little push down. Now this here, sorry, move that there, actually move that back. This here is what the original trade should have been if I had been in front of my charts to pick it. This would have been the original trade. I would have been in on the close of this candle. See that this candle here shows a strong rejection from the fair value gap I drew. 15-minute fair value gap. So there we go. So that candle's rejection here, from here all the way down to there, should have been the entry. Stop loss at the top of that. Take profit. Put it there. You put it there. Wherever you want to put it. So let's just put it there, since you could have gotten out here and still made, or you can get out here and still make 4%. If you go to where I'm trying to get out, you'll be making 5.5%. Not huge, but every little counts. So because I had a later entry, I have to be a bit more judicious with my stop loss. Oh no, sorry. 1 second. I've got to be a bit more judicious. So basically that's my entry. And my stop loss is, I think I put it there, thereabouts here, something like that. Yeah, here. So yeah, that high there. Yeah, there we go. And so I am looking at, on this one, like I said, I've already closed for 3% on the full contract, on the mini contract. I'm looking at, yeah, 4.5 to 1. All right, guys, it's been live. Let's go. Let's end Friday well. Whether you're making live money, whether you're learning, relearning, let me encourage you. You are developing a skill that can feed you for life. You never need to retire from trading. You will never be, as long as you have your cognitive faculties, means you're not insane, you don't have dementia, Alzheimer's. And basically, as long as your mind and your hands, your brain can still function well, and your hands can still click a mouse, and your eyes can still look at a chart, you are developing a skill that can feed you for life. It's also a skill that you can teach to your children and pass on to generations after you. Give it the energy and the time it deserves. I believe in you. Believe in yourself. Let's grow together. Let's build wealth together. And let's control it. Let's not let it control us. Yes, I like that, Kieran. All the robots are working. Yes, we really need to get together. Kieran, Samuel Devante, and I. We really need to get together and do some coding, so we can stop saying, oh, it was a busy week. Like, technically, this trade, like I said, that's why I said don't do this if you don't know what you're doing. But it was a case of, I missed the move. Okay, fine. I missed the main move, but I have enough experience to see how I can make something out. But I would like to be catching the main moves. Like, for instance, let's just do this one more time. If we caught the main move here, 1 second. If we caught, 1 second. if we caught the main move here, that should have been the stop loss. This should, at the very least, have been the entry, right? At the very least, have been the entry. And we would currently be up. Let's see now. It's not telling me how much we would be up, but basically we'd be up at least 2% by now. So that really is what this was giving us. But we cut it down there. Or at least I cut it down there. I think Devontae cut it a bit earlier. All right, guys. Love ya. I got to go. I'll see you. I'll try and do an analysis session on Monday. I think Monday will be the next one. And we'll see how it goes. Oh, yes. One more thing before you go. So just, it's not a plug. It's just letting you know what's coming down the pipe or the pike for those of you who are interested. This is what we're hoping to be able to bring you by the start or the middle of January. 1 second. One second. All right. So, this is what we have planned for you. Market Breakers course, VIP mentorship, mastermind, inner circle. Let's get this coming off. The Market Breakers course is going to be a full immersive. Basically, we're going to try and make you an institutional trader, a market breaker. Like, we're going to teach you not just tips to make money. We're going to school you in how the markets actually move. I can get this comment to leave my screen. In how the markets actually move. Okay, it's left the screen. In how the markets literally move. I think this music's a bit loud as well. All right, so all the stuff I'm showing you, I'm actually writing 4 books at the moment to break it down. The principles behind it, what makes it work, the thought each chapter has a section that shows you what you're looking for in a chart, or I think I'm going to add a section of volume analysis once I fully master that, and then tell you what it means about what the market maker or the institutional traders are thinking, and what the retail traders are thinking. In essence, why does this thing look like this on the chart? What's the mindset behind the people trading to make it look like this? And therefore, you'll understand why this means. So you'll understand what a fair value gap looks like from the perspective of the mindset of the people who are trading, all that kind of stuff. VIP mentorship also means we'll take what you learn and just basically mentor you. And I'm hoping to bring a lot more people aboard as well, not just me, other traders who are good, e.g. Samuel, Levante, and a couple of other people, and just see how we can create an environment where you can just have somebody, what I never had was somebody tell me, okay, this is how to put it together. That's what I try to show you every time I do one of my videos. This is how to put it together, because you can have all this knowledge. In fact, too much knowledge can be worse than too little. So this is what it looks like. These are the practical tips. This is how you do it, right? Hands-on mentorship, personal mentor, psychology, mentorship, mindset. That's very important, so you don't blow your account. Review and feedback on your trading results, weekly and monthly analysis, almost daily mentorship webinars, because I'm hoping to get a lot more people on board doing these as well with me. Heavily discounted. In essence, personal tuition means we sit down with you and say, okay, let's trade together, or let's go through your results together, and show you what you're doing right or wrong. All right. Access to the Traders Village and virtual. One second. Let me put that up. Let me take this banner off the screen. I can't wait to get my systems. This thing is slow. All right. So the Traders Village, the plan for the Traders Village is to actually have a virtual online traders desk. The same way in the old days you would come to work in a trading firm, and there'd be several traders sitting around each other, cheering each other up, and sharing insights and things of that nature. We're hoping to create something similar, but from a virtual perspective. And if it goes well, I mean, if there's a demand for it, we could actually just rent space in major cities eventually and actually have real live trading desks where people can actually come to work, quote unquote, and be in an environment with other traders. Uh, and of course, the mastermind inner circle, the signal service, strategies and trade models that we customize for you, customize watch lists. Basically, say this week, look at this, look at that. If this, then that. Macro market, intermarket analysis. This is where the robots come in, uh, the automated trading and some other things as well. So um, we're hoping to be able to go live. We'll see. We'll keep you posted in January uh, with the Market Breakers course and the VIP mentorship and the Mastermind Inner Circle. The Traders Village will come a bit later. Uh, if you get in at the well, one second, say I fired this. So how do you get in? Well, send an email to israelkeysgroup@gmail.com. We are coming up with a price point. At the moment, it'll be somewhere in the region of about 70 British pounds a month. Uh, I think that's roughly about 85, 90 USD a month. Basically, would give you everything because I want to be able to give value to the people who are going to be involved with me as well, not basically abuse their time. Um, I don't know that that's going to stay the same for much longer. Once and if it gains traction, we'll review that. But that's where we're going to be starting. So um, send an email to israelkeys@gmail.com for inquiries. We have a free Telegram group that's going to stay free, right? So you don't need to pay for that. Let's see if I can find it. Put it up on the screen. The free Telegram group is Plural Market on Telegram. Let's find it. Let's find it. Plural simply means many. So it's an allusion to the fact that we want to be a community. All right, there we go. Well, it's at the bottom of the screen. So there you go. All right, guys. Cool. Take care. Bless you. Bye bye. Kieran says you join when GBP takes a dive. What we might actually do, oh, yeah, you can't hear me. What we might actually do is fix it in dollars, because I don't live or I'm not resident in the United Kingdom anymore. So we might fix it in dollars, Kieran. That makes you feel better. All right, bless you guys. Take care.